Mortgage originators, company owners, listen up. The NMLS is changing for the first time ever this year, and you have to be ready. Your sales teams have to be ready. On top of that, we just had hundreds of mortgage professionals march on Capitol Hill. Yet, many of us are in the dark. What were they doing up there? What were they talking about? Why was it so important? Lastly, it's Mortgage Action Alliance Week. And I'm guessing too many of you are not involved in your trade organizations. You're not advocating for the one industry that provides for you as well as for the American homeowner. In today's episode, I've brought back one of my favorite humans in the mortgage space. He's going to be the guest for today, and we are going to discuss what's happening with NMLS. We're going to discuss why we're hundreds of mortgage professionals in DC. And we're going to talk about what it means to be involved in your industry and why it's so important and why your industry needs you. Check this out. Ladies and gentlemen, boys and girls, children 18 plus, you are tuned in to the Loan Officer Podcast with me, Dustin Owen, and a very special guest. This guy is back for his second go-round here at TLOP. If he catches you doing things in a non-compliant manner, he is going to treat you like a slot receiver coming across the middle, and he's going to lay you out. If he sees or recognizes that you are not involved in the mortgage industry, yet you're a mortgage professional, he's going to throw a flag on you for unsportsmanlike conduct. He is my friend. He is a fellow CMB, the one, the only Bob Niemi. Bob, welcome back to TLOP.
Welcome, Dustin. Love being here, even after the 2-hour plus drive to get here.
You are the man.
But
you are the man for that, Bob. I appreciate
two things.
it.
One, I love listening to the intro every time I hear it. And when I'm walking, I hear the podcast. Ladies and gentlemen, I love that intro. And you just, I think I need to hire you to follow me on the road just so I can say, and introducing Bob Niemi will be Dustin Owen. And you just walk out onto the stage.
You know what? And for a price, I'll do just about anything. And I love to
travel.
So
the sticker and, the CMB socks and the other little, that's not quite cutting it yet, huh?
I mean, my CMB socks, like if you guys are watching on YouTube, you see I'm rocking my UCF socks today. I went looking for my CMB socks this morning, and look, it was about 5:45 when I was like getting dressed, so maybe they were buried in my top drawer somewhere, but I couldn't find them. I was gonna rock them for you. They were a gift. I do appreciate it. But no, I'm stoked to have you back on the show because we do have so much going on. And by the way, if you didn't know this, I did a football reference for your intro this time. I switched it up.
Yes, very true. Appreciate that.
Yeah, I know how much you like the intro, but I switched it up because you played college football and you were a referee for college football.
Correct.
Yeah.
I'm a 1985 graduate of the Western Illinois University, the Fighting Leathernecks. I say the because I also lived in Columbus, Ohio, and the around OSU, just the fun of that. But then I did get the opportunity to officiate high school football for 16 years and college for 11 across the Midwest. Highest I got officially was D2, but I did make the trip to the Big Ten office and got approved to do spring games for the MAC, the Big Ten stuff. Never did a Big Ten one, but I did several MAC ones and had a lot of fun. I miss it to this day, but it is a unique thing that you are still enforcing rules after being a former state regulator at the same time. It was an interesting time.
Yeah, it's good to know. So like your role today in the industry, like a lot of people know you as Mr. CMB, right? The CMB is the highest designation you can achieve in the mortgage industry. It's a certified mortgage banker. It's something that Bob and I have in common, and we're probably a couple of maybe 1,000, 1,500 active in the industry that have their CMB.
Yeah, the systems on MBA show it's somewhere around 1,200 people total that are tracked within the system. I think current active, now that we have active and inactive, and then people that have retired and gone emeritus, we have about 600 that are active and growing all the time because I know I just added a new one Friday to our CMB group.
Yeah, I've sponsored one person. Shout out to David Sparks who went through, and I have another person who's currently trying to achieve the points that are needed. It's a whole process, and if y'all are ever interested in learning more about what does it mean to be a CMB, why should you get a CMB, when are you ready, you can reach out to Bob, you can reach out to me. We both love talking about our CMB experience. But no, your intro was me referencing your love and your affiliation with football.
Correct.
For those that are like, yay, team, go sports, a slot receiver going across the middle is essentially one of, I think, the toughest routes to run, because
Correct.
typically a slot receiver is a much smaller than a linebacker, and that linebacker is sitting back. They play defense, by the way, and they're waiting for that person to catch the ball, and then they're going to lay them out. Like one of the hardest hits, jarring hits. So yes, if Bob catches you doing things non-compliantly, he's going to go back to 1986, act like he's that middle linebacker he was, and treat you like that wide receiver coming across the middle, and he's going to lay you out. And if he finds out that you're a professional earning a living in this industry, yet you're not giving enough F's and enough S's about our industry, meaning you're not advocating and you're not a part of the industry, you're not part of making it better, then he's going to throw that unsportsmanlike conduct flag on you, because it's very important, not just to Bob and I, but to the industry, that we all have a voice and that voice is heard. And that's really what we're going to be talking about today. We're going to start with the NMLS, Bob.
Well, first off, I do want to say, one, I'm not actually going to lay you out. Mitch would not appreciate that. So I am the Director of Government Affairs for Weiner, Brodsky, Kiter, PC, which is a DC-based law firm. I live just north of Tampa, which is why it was a 2-hour drive to get over to see my friend Dustin. And in our role, the law firm does represent, and I'm certainly going to come across and would be stern with some people about understanding, what the rules and the expectations are for people to, operate ethically. I've been in the mortgage business since 1987. I love it, what we do for families. So both as a client, as someone else who's in my industry, and yes, we need everybody to act ethically because we all represent each other when it comes to helping families buy homes. That's very true to my heart in this business. But we also need to make sure that we're doing things that operate in the best nature of where we want to be. And we'll talk into some of those things later when we talk about, the takeaways from NAC.
Yeah, thank you for coming over the top of the people's elbow and put me in my place. I totally neglected. No, I forgot to mention. Hey, by the way, yes, let's give a shout out to Weiner, Brodsky, Kiter. Mitch Kiter, I've had a chance to meet. What an amazing guy! He travels the circuit. He speaks on big stages. But you are by far one of a handful of premier law firms that focus on and specialize in the mortgage industry.
Yeah, we are definitely a boutique. I guess that's what you call when you're under 100 attorneys and you focus on a specific product. But it's been mortgage specific for over 40 years. I've only been there for the last 3. I am not an attorney. I don't play one on TV. I hear it a lot. But I am a former state regulator. I was in the mortgage world for 24 years before taking over Ohio Mortgage Bankers. And then I've worked my way through. But I'm definitely someone who has learned how to teach compliance and ethical standards for MBA. I teach a number of those courses for MBA School of Mortgage Banking. And just in the industry with teaching sales teams, understanding, because laws are written for lawyers. Lawyers don't write policy for people who actually take loan applications, have to follow up on them, do closings. There's a little bit of a break there in language, and I try to bridge that gap.
Yeah, you bring the human element to understanding compliance and complexity.
Yeah, Mitch doesn't like it when I say I'm the relevant or the the one that means something in the street. And he goes, "You're meaning I'm irrelevant?" And I said, "No, you're not over." It's a fun conversation.
Yeah. Well, let's do this. We're going to take a quick pause so we can hear from today's show's sponsor. Then we're going to come back talking about these NMLS changes and how they're going to be disruptive, how you should prepare in order to make them, a little bit less disruptive. But first, check this out. Y'all, something big is happening at Lower Mortgage. And if you're paying attention to this industry, you've probably noticed. In just the last month alone, Lower has added some serious horsepower. We're talking top producers representing over $350 million in volume. These aren't rookies kicking tires. These are heavy hitters who've done their homework and made the move. That should tell you something. On top of that, Lower just acquired Movoto, a top 5 real estate portal with over 150 visitors just last year. Before that, they brought in Neat Labs, and now they're launching Lower OS, a next-gen mortgage platform that's cutting loan delivery times down to 10 days. This isn't a company standing still. Lower doubled their volume last year, and they're projecting another 40 to 50% growth this year. The best in the business are taking notice, and they're voting with their feet. Here's the reality. The companies that are going to win in this market are the ones investing in technology, building real infrastructure, and competing at scale. Lower is doing all of that. They're going head to head with the Rockets of the world, and they're built for originators, not against them. If you're a producer who wants to be a part of something that's actually going somewhere, not just surviving, but growing, this is the moment. Lower Mortgage, the momentum is real. All right, so we're back. All right, Bob, let's jump into NMLS. You and I talked about these changes probably 6 months ago when you were last on the show, and you kind of foreshadowed them. Well, here we are. It's 2026. April has come and gone. So in April, the NMLS notified all lenders of their changes. I think we have, they want certain stuff done by August, but obviously we have to renew in November.
Right.
Okay. I'm going to let you drive the ship.
Okay.
What do we need to know? Whether you're talking to a licensed originator, you're talking to a branch manager or a company owner, what do we need to know? And then let's also break it out to those that are registered versus those that are licensed, because there's a difference.
Right. So certainly if you work for a bank, credit union, depository, you're on the registered side of the NMLS, the Nationwide Multi-State Licensing System. It's where you get your license. Although the NMLS does not actually license you, it is how state regulators coordinate the approval, renewal of license, and then they maintain their records, and they can do it uniformly, at least as far as background checks and credit reports and stuff like that across the country. So as part of the licensing process, you go through and you complete your application, and you also sign a list of disclosure questions. Much longer for the state licensed MLOs and control persons than it would be for a registered entity, but that list of questions is what's being updated. So you're asking me earlier, how long this has been. It's been since 2008 that the system was originally put together and launched and then brought into Dodd-Frank and made official that everyone needed to be licensed by 2010 with the pre-licensing education, continuing education, and annual licensing checks, that you still meet the same standards as up front.
Yeah, so living through this, I remember, it was 2010. 2010, I worked for a bank-owned IMB, so we just had to go register. But my friends who didn't work for bank-owned or didn't work for a depository, they had to go, and all of a sudden you're taking this 20-hour course, you're then studying for and having to pass this exam, and then now you're a licensed originator. So it's been, we're going on 18 years since it was first established, but 16 years since it's been fully enacted. So for 16 years, we've had no changes.
Right.
And we're going to have changes this year. And walk us through, what are, high level, what are these changes? But more importantly, what stands out as hey, you need to know this so that you don't trip up, you don't fall into this pitfall, whatever the case may be?
Well, number one, if you think it doesn't impact you and you are a licensed or you're a part owner or a branch manager, you said before, check your NMLS record. You'll find out you have a license item. They did not want to ping a lot of people. Now, all the company court people that are coordinators or the people who maintain the systems for a different mortgage company, they got noticed of all of their people who had to complete the licenses, so they would know.
Okay, so if you're a company owner, you and your team have been notified already.
Yes.
Okay, if you are a licensed originator, if you log in right now to the NMLS, which means you have to go figure out what your password is, you probably have to reset your password because you forgot your password and you can't find where you stored it. Once you go through that, you're going to notice that right now there is an action item that the NMLS is telling you need to do.
It launched on April 18th, the date you mentioned before, which was a Saturday. They gave 135 days that they have a soft deadline of August 31st to complete. And they would like to get all of these done by that time so none of it falls into any review that would occur during normal licensing renewal process. Because any other system in some states, smaller states have 2 or 3 people in their licensing group, and they switch through the year, licensing check cashers, pawnbrokers, and then do mortgage at the end of the year. We don't need extra workloads on them. And if there's been any changes, and what is specifically changing are the disclosure questions. Some of them were overly broad. Some of them did not ask the right question. We could say, have you ever had a bankruptcy? No, I've never had a bankruptcy. And that'd be honest today, but you're going to your final bankruptcy hearing next Friday, and it's going to be in there but the time you click the button,
Oh,
So it says,
okay.
or coming, asking about child support payments, expanding the list of, entities that might be, not just a state regulator. Have you ever been sued for ethical challenges, dishonesty, those things? So it's greatly, I showed you the red line of the questions, and you could tell, some of the questions are 3/4 red with new language and confusing it. And several of the questions I've been called multiple times to say, I don't understand this, because I was examined. They did start an investigation. They were very concerned. They actually put me on notice that they thought I was in violation. We got the chance to walk all the way through, and then they dismissed that because they found.
You're saying you got questions from an actual originator.
Okay. And people who own, small mortgage brokerage companies, and they're trying to read it and make sense, because like question 16 starts with A and ends with I, with different potential scenarios for this. And it's like, well, which one applies? But wait, I was under investigation, but I never had a consent order. I have nothing that I have to report on NMLS. This is just trying to say, okay, outside of NMLS, because all the CFPB findings and everything that, actions they take, they're not all on NMLS.
So is this one of those, well, and first and foremost, you mentioned the red line. Bob did. He came in this morning. I was finishing up a meeting. And if you know anything about Bob, he's always thorough. He's always prepared. So he had sent me these documents yesterday. I had planned on reading them this morning. Before I even had a chance to read them, he already had them printed out. And then he had shown me the questions. Like, hey, these are the questions that originators are going to have to answer. And it was the old version with the new version. The page was red. It was red, like meaning R-E-D, not like, oh, I read it. It was like the color red, because if it was in red, that meant that was one of the changes.
One of the additional words.
And this was like a 6-page document that you had printed out and brought to me. So we're sharing this because this should be your WTF moment where you're like, okay, let me start doing something now. The worst thing is you do it, it takes you 30, 40 minutes and it's done. However, that's best case. I'm guessing there's 20% of you that you have flown through your renewal every year. For 16 years, you've just been flying through it. There's 20% of you that are going to start it thinking you're going to fly through, then you're going to get stuck. And worse, what would happen if could someone go from, like, I'm going to use a loan file terminology, like, oh, we did not approve you. Your loan file is currently suspended. We need more information.
Yes. So first off, I do think about 90% of the people out there will still fly through because they've never had a bankruptcy. They've never had any judgment suits, garnishments. They've never been sued for any of the things that might show up on there. But people who before answered a yes question, do you have this? And it would be, no means no. I've never had this in my background. If you had a yes before, you're going to have to go through and reread and understand. And your old explanation won't be filled in. You'll be able to see it. You could cut and paste and put it back in if it's still the same. But there will be those people because of the overly broad, questions before, and you were able to work your way out of the logic in your head that you didn't have to respond yes. Now that's going to be a much more limited scenario, and people are going to go from a no that were a no before, have been licensed since 2010, and now it's a yes. And that state regulator is going to look at it and say, what's the reason? And yes, I'm sure they're going to have a great explanation. And by the way, in the FAQs, which is one of the pieces that I wanted, Dustin to be able to share, as well as the website. That's the main purpose of why I emailed you in the first.
So can we put these in the show descriptions?
Yeah.
Okay, guys, especially on YouTube. In YouTube, we will have the links to these resources in the show description. That way you can find them. I'm pretty confident we can do this on Spotify and Apple as well. Just make sure you check out the show descriptions.
And they're going to link to the official NMLS documents that are provided by CSBS, the group that runs the NMLS. There are going to be those people that do have that extra set of review, and those questions are retroactive. So if it was something, there will be some people, we think it's going to be minimal, but it's kind of hard to know.
Like single-digit percentage minimal.
Correct.
Okay.
Of people who may actually have a much harder time to find out. But a lot of them will be, yes, you need to look at this, but it's still out there. And
but
NMLS,
you don't want to handle this in November.
No,
You want to handle
you do
this
not.
now.
That's why that was part of the discussion, because I mentioned it when I was on before, and you said, hey, when these come active, let me know. We'll get you back on so we can at least get the resources. Because when I talked about it before, these resources didn't exist. They were still in production. They are out there now. They are live on the web, and you need to find out. And if you don't understand the question, find the person at your company. If you don't understand, find the person that represents you. What, licensing company, lawyer, law firm, whatever, understand. And I know from being at MBA's Legal Issues Conference last week in Miami, there are companies that are saying, yeah, some MLOs saw this and they went and just started answering it, and they answered them the wrong way, and we had to jump on right away. And if you have some of these issues in your background, your company can't see what your explanation is. The company can't say, yes, I had a judgment, yes, I had a bankruptcy, because that's private background information to the individual, and NMLS will not share that with anybody else. So it's difficult for the company person. This was a multi-state mortgage company that was in 30 plus states.
Oh, so you're saying it's difficult for the mortgage company to advocate,
right,
and
coordinate
and
with
fight
their team,
for their person,
right,
because they don't see this data, they don't see this information. So I want to move on to DC and I want and the NAC conference, but is there anything that we left off on the NMLS that's super important?
Yes. One, because we mentioned that it's also control persons. If you are a control person, and say you have 5 people that are part owners or senior leaders at your company, and they've been designated control persons within the NMLS, you cannot add a branch, add a state license, change, do a merger, anything until every one of those people, not your MLOs, but all your control people, have updated their current disclosures and attested in the system.
Okay.
So that does put a link, and it has already impacted some of the transaction work we've done in several states where they said, yes, we're all set to go. However, 2 of your 5 people have yet to do this. They need to do it before we can approve on our end.
Well, man, you may have to take half my CMB pen away from me when I ask this question, but
TLOP Unite is not your typical mortgage event. This is the first ever TLOP cruise experience built exclusively for originators. And for 4 days, it's not about the speakers, it's about you. We're talking breakout strategy sessions, real conversations, curated events, and uninterrupted access to a community that helps you grow. If you're serious about taking your career to the next level, this is where you need to be. Space is limited and the price is right. So click the link now and learn more.
I was today years old when I even knew that there were control people. So every organization, like Cross Country to Movement to New American, all the way down to a smaller lender, has a control person or control people,
yes,
that aren't necessarily doing loans, but they themselves have to go through the same process.
And it's based on the size of the organization, where you're at, and what states. Virginia specifically defines control people, and they will tell once you give them your org chart, we want you to background check these 5 people. It's chiefs of compliance, chiefs of the people who are in leadership and have the opportunity to enforce regulation, rules, policies, overseeing a group of other folks.
Okay, so even the leaders,
yes,
of organizations, they have to go through these changes.
Yep.
And until they're all done, then it's going to prevent those organizations from acquiring somebody, from opening a new branch, expanding into a new state, et cetera.
Yep.
Yes, this is very important. It's like these are big changes that aren't necessarily being written about on social media, talked about on YouTube, or I haven't even seen it in some of my favorite trade publications. I don't know if Housing Wire's had a chance to cover it just yet, or maybe they'll start covering it once it gets closer to the moment when everyone's freaking the F out, and then they're like, oh, this is big news, let's talk about it. You and I are trying to prevent it from even getting to Housing Wire, because we're like, look, we can prevent this if you guys just take action now.
Yeah, it's been publicized, but it's on the story. It's not at the top of the page.
There we go.
It's not the top. It used to be the newspaper. What's the top fold? Mm-hmm. It's not on there, but it's been out there, and it is information. And I just want to get the word out because I don't want this impacting people, and we start having issues in October, November, December.
What are those 2 websites right now? Like, I know we're gonna put them in the show description, but if you do you?
It's about like that long.
Oh no, yeah. Check show descriptions. Okay.
That's why I said I better email this to you.
Yeah, and if you're listening on Spotify or Apple, like Bob just showed us about 14, 15 inches on a tape measure. He's like, that's how long the URL is. So we can't just throw it out. Like I can throw out all the time. Hey guys, if you're looking for coaching, go to tloponline.com. Or better yet, Bob,
you could,
if you and Melissa want to join us on the TLOP cruise, you would find all the information about the TLOP cruise that we're doing in September on tloponline.com. Right. That's super easy to throw out. These, they're too long. Got to check the show descriptions.
I mean, if you Google NMLS Resource Center, if you Google NMLS disclosure question changes, it will show up and you'll get a link. Make sure you're going to the CSBS, the NMLS links to do that. There's a lot of different things at my law firm, other law firms that put out guidance on it. But just make sure you go to the source first and understand from them before you move on.
Cool. And when in doubt, raise your hand and ask questions.
Always.
All right, let's check it. So let's talk about this. Last month, you were a part of, I mean, heck, I know there's like 75 LOs that were there. 98 CMBs were there. Probably, I'm guessing from my past experience, 400 to 600 total mortgage professionals.
It was right about 600, just under 600.
Marched on Washington, D.C.
Yes.
Met with your Congress people, met with your senators, advocating on behalf of our industry. For those of us that didn't get a chance to attend, you should 100% check out this conference next year. We call it NAC. It's National Advocacy Conference. It's through the Mortgage Bankers Association, a.k.a. the MBA. It is by far one of my favorite conferences. You said it's one of your favorite conferences.
100%.
And it's typically around, it's always in the spring, but it's typically September, March, April. And if you time it right, you can maybe even go for cherry blossom season.
Right.
But anyhow, so you were just up there. I couldn't make it this year. I had too many other things on my calendar. What were 3 of the major topics that you all, when meeting with our elected officials, were advocating on behalf of our industry, but as well as on behalf of the communities we serve, which are the real estate community and the home buyer, homeowner community?
Right. Well, number one, the first thing we did was we thanked them for all the work they put together after 3 years, both us, NAM, NAR, other groups, advocating for, putting legislation in place that trigger leads would be banned. That went into effect in March. And we're hearing that, there's still some abuses, but it's getting better. But, they voted for it.
Yeah,
so we wanted
you
to
started with gratitude.
100%.
I actually coached that. Gratitude and compliments will take you so far in any conversation. So you said thank you.
Said thank you. Talked to them about that. And then we talked about some of the challenges with the Road to Housing, the 21st Century Road to Housing bill, because we have a Senate version, which we like some parts of, House version that we like some parts of. We'd love to get it together. But there are some challenges with it. So number one, and I know I asked you earlier, ROAD, and ROAD does actually stand for things. As you know, when they put bills together, they like the words to mean something.
They love acronyms. Yes.
Like SAFE, the Secure and Fair Enforcement
Yes.
Act. ROAD is actually Renewing Opportunity for the American Dream. And it's great that we have consensus, that we have a bill coming out of the Senate Banking Group. First one since Dodd-Frank that's had, cross both aisles support. It's being moved through. Then they got 87 votes in the Senate to pass it, and it's moved. And now we're trying to get it to go to be finalized and put into place. And that we have an administration we are talking about housing. I'm very critical of every administration, and it seems like housing makes its way into the political, when we're having discussions, when we're asking for votes, but then they get in the White House and it's all of a sudden they forget about helping us get in our house. But we talked about that one. Number one changes, just concerns out there about, if you're going to build to rent housing and you have this investor ban, that they have to get rid of the properties after 7 years. If you build what could be single family home, attached homes, townhomes, there's some limitations in there for that. There's concerns about how you would actually make it work. I know there's differences by metro area about how much this truly impacts. And it's like nationwide, it's 2% of the available housing stock. But in some metro areas like DC, it gets up, 20-some percent.
So I'm gonna wind this back. So the first one was build to rent.
Well, this
right?
is, the investor ban. The
investor ban, but that would only be if they're using either Fannie, Freddie, or HUD programs. Like if I'm using cash, is the government trying to?
They would still want you to divest that property after 7 years.
Okay.
7 years, the base of the way that is.
Yeah.
And that's obviously a challenge for the industry, and the concern also that the properties that are built to rent, just some of the limitations from there. So it's of great concern.
Okay, so but that was a conversation you were having. Like you're talking about the road, but road itself is separate than the large institutional investor ban. Is that
no? That's part of the road.
It's
it
part
is.
of it. Okay.
Road to Housing is they basically took a bunch of the different bills that they've been working on independently, put them together to agree.
Okay.
Because that's where we talked about the FHA insurance guarantee fund being used for housing counseling for all different loan types. While we have a benefit now of a high the amount of 11.2 that they have in reserve with the the Mutual Mortgage Insurance Fund with FHA. Let me get the initials and everything straight, so I don't have to call you later and tell you where there was.
Yeah, right.
That has an excess. It is higher than the statutory required limits. But if you're going to use this for other things than what it was intended for, it's going to run down that fund. And we also know there's been times when it's been under 2%. We don't want that. So that was another one. We talked about multifamily housing. So the FHA multifamily loan limit has been the same since 2003. Do you remember what the Fannie Freddie?
Wait, say that again. Oh, the multifamily.
The multifamily loan limit.
So it's interesting. Many of us on the residential side, we fail to remember that HUD and FHA, they have loan programs.
Correct.
That are also for commercial developers.
Right.
I can go get an FHA loan to build a 12-unit apartment complex.
Yep.
And those loan limits haven't changed
Since 2003.
Since 2003. So what you're telling me is that we could have more affordable rentals in our communities if this financing was more readily available.
Yes.
At loan sizes that make sense, because 20 plus years have passed since HUD last updated this. So although we're residential people, I know the MBA advocates on both residential and commercial, right? I'm sure you have clients that are both
Yes,
residential
100%.
and commercial. Most people who tune in the show tend to be on the residential side. But what we have to understand is that when you have affordable housing
Yes.
in general, now all of a sudden it's a lot easier to get the people who want to own into homes they can buy. But when when housing isn't readily available and housing isn't affordable, it impacts everything. And so you're saying, hey, if we could just build more apartments for cheaper, we could rent them for cheaper, and that would overall make housing more affordable, at which point home ownership becomes more accessible.
Think if you had to live with a $322,700 loan limit, as it was in 2003, the Fannie Freddie conforming limit.
You couldn't do that in half of the country.
Right. And obviously it's in the 800,000s now. So, I mean, it's dramatically gone up.
Okay.
And just let alone the expense for multifamily housing.
Yeah,
and we all should agree that renters who have a good, solid rental history make better first-time home buyers.
Oh, 100% they do. And how about this? If rent's affordable, maybe you can save more money for the funds you need to purchase your first home. So
it's a piece of the puzzle along the way. It's not just the house. It's all the little pieces that make it through.
I love that. Yeah, it might not be the rocks, but it's the sand in the water.
Yeah.
If you've ever seen that professor's analogy of, I think life in general and the decisions we have to make, and yeah, it's a piece of the puzzle. So you all were advocating for the road to recovery. You were thanking them for their success with trigger leads. Obviously, inside the road to recovery is addressing institutional large-scale investors.
Right.
And how can we protect capitalism while also protecting the end user, which is the consumer?
Yes.
Right. I think that's the balance that the House and Senate have to ultimately negotiate when they're discussing these bills and trying to pass them into law. And then you're also advocating for changes for commercial FHA use, but understanding, yes, that benefits our commercial friends, but it also benefits residential because it's a piece of the overall equation.
Right. I think the one challenge that we learned, it was specifically shared last week at Legal Issues, that the administration's probably not going to step off where they are for the investor ban, because it's the number one item that polls with Americans today. They're all against investors competing because they've all lost. I know when my son was buying a property in Columbus, Ohio, competed against, was a first-time home buyer, constantly competing against the investor, doing an all-cash bid, and just missed out on a house like 12 or 13 times before he finally flipped.
Yeah, so it's in a way we're trying to stand up to big business
Yes.
and say, look, guys, I know you're trying to make a buck and return value to your stakeholders and your shareholders, but you're doing so while also punitively damaging the people who actually make things happen in this world, which is people like you and I. It's middle America.
Yeah.
Let me ask you this before we find a way to wrap this up and close it out. What's one of your favorite memories ever from attending NAC, the National Advocacy Conference?
The most impactful one is when we were, and you might have been in the room, we were in Senator Rick Scott's office. We were sitting in the long conference table. And by the way, they have now actually said, limit it to 12 group, because I think we walked in with 20 people and we had 6 people standing against the wall. And his chief of staff was in. And the first item we let off, one of our CMBs from downstate started talking about the trigger lead things. And she started to explain what trigger leads was. And his chief of staff's kind of looking down, looking at notes and stuff about who's in the room. And all of a sudden she goes, wait, trigger lead. Is that what happened when my husband and I were buying a house and we applied for the mortgage? We were sitting there with our loan officer, and right away my phone started going off and they had 74 texts or calls that day. And all of a sudden, she went out and got Senator Scott, came back in, and guess who was on board for the bill right then and there? That's where it says making a difference. People getting off the sidelines, showing up and being, telling the story of how this truly impacts. We say the CMB test is very similar to what NAC is. You got to know what the issue is. You got to tell a story about how it truly matters in their district and how it impacts families buying homes, and how they make better voters too, by the way. Those folks, if we can support them, and then what is the MBA position about this, or the NAM position, or whatever it is, whoever organization you're out there. I'm 100% MBA, believe me, but I also love NAM and I'm a member of them as well. That's the part, the biggest part. When you walk out of that meeting, right then and there, you got somebody who said they're on board.
If you're a licensed originator who's closing loans, but you're not consistent, this is for you. If you're brand new or just looking for motivation, trust me, this is not for you. Most LOs don't need more information. They need structure. They need proven processes and somebody to hold them accountable. T-Lob's Originator Coaching gives you weekly live coaching, scripts top producers actually use, and step-by-step business systems you can implement immediately. Not someday, we're talking day one. You're not watching videos alone. You're executing in real time with other originators who take this seriously. Right now, you can try it free for 2 weeks. That's 2 full weeks for free. You'll sit in on live coaching calls. You'll get access to the frameworks and see exactly how top producers run their business. If it creates clarity, if it creates momentum, or even if it puts wins on the board, you keep going. If it doesn't, no worries, you can cancel. No pressure at all. Click the link, start the 2-week trial, and finally build this like a business, not a side hustle.
Yeah. No, I mean, it's, if you were to ask me the same question, it's interesting because I remember that meeting with Senator Scott's team, because a lot of times it's their chief of staff or it's an aide. But I'll tell you this, they care. They truly care. They come in, they take notes, they listen, but also they don't know. Just like you probably can't explain to me, me and the audience, Bob probably can. You can't explain to me the Senate rules, right? You can't probably walk me through how many people make up Congress, right? How many were in the House? It's, by the way, 435. But most people don't even know that, let alone like how does a bill become a law, and it starts in the House and then it goes in the Senate, and like what does it mean to be on this appropriation? Like that's not our job, right? But guess what? It's not their job to assist home buyers and homeowners and to sell real estate and to finance. So they truly do care and they truly do not know. But I have 2 memories that always stand out. Actually 3. My first one was, this was the one event, because it's a little bit more low key and it's a little bit smaller, that like I'm having bourbon at 11:30 at night with Bob Brochschmidt. Right? Bob's the CEO of the MBA. He's a 30+ year
CMB.
Mortgage executive. He's a CMB. He's a Yale grad. And just an overall good dude. It's just he and I and one other guy. It's 11:30 at night. The bar's probably shutting in 15 minutes. It was last call. I'm like, how cool is this to get this type of FaceTime for 25, 30 minutes before we go to bed? The next meeting is my group and I decided we would start making our way through some of the Capitol on our own. We're trying to find our way to our next meeting, got lost. Well, if you don't know there's a train system that takes you from the Capitol building into some of the office buildings. Well, you're supposed to have like credentials to get on that train, and you're supposed to have an escort. We had neither.
Yep.
We're trying to get on the train and we couldn't. They stopped us. But here's what was really cool. Walking back to where we came from, ran into Marco Rubio, and totally he took the moment. He said hi to us. He took some pictures with some of the people. And I was like, how many chances do you get to just run into Marco Rubio in the Senate? And then we had some downtime. And during our downtime, we went up to the Senate floor. Right, so we got to go in. We had a pass. Went and and Congress is in session, so they're voting, and it was watching. Who was it? It was Elizabeth Warren giving a warm embrace to probably Mitch McConnell, and realizing they're on Team America.
Yeah,
they may have vastly polar opposite views on what makes the country better and how to operate the country. Right. But at the end of the day, these two people respect each other, regardless of what Fox or CNN would make you believe. Regardless of what they say when they're politicking and fundraising, that I'm like, maybe it's not as bad as the media makes it out to be, because I watched them laugh. I watched them embrace. And I bet the conversation had nothing to do with the bill that they both just voted on. And I'm sure she voted yay and he voted nay. But it's just like, those are the intangibles that I think you miss out on if you don't take the time to go be a part of events like this. So I'd highly encourage it. Check it out. It'll be probably April of 2027 in Washington, D.C. So on that note, let's talk about advocating. It is MA week. For those that don't know, what does MA stand for?
Mortgage Action Alliance.
And how much money does it cost to be a part of MA?
Zero.
As John Coleman would say if he was sitting in this room, it's free 99, right? Or John would say, if it's free, it's for me, right? That's what John would say. If it's free, it's for me. I think I say free 99. I probably ripped it off from a buddy of mine. But John would say, if it's free, it's for me. Yeah, it's MA, the Mortgage Action Alliance. This is our industry's grassroots effort that when something is transpiring, we need the coalition. We need all of us. We are the troops. We are the boots on the ground. We don't need you to travel to D.C. We don't need you to go to your state capital. We don't even need you most times to even go to your elected official's office. All we need you to do is log in, click a couple buttons, and let them know what the industry's position is about a certain item. So if you are not currently signed up to be a MA member, what do they have to do, Bob? Text a phone number?
You have to text MAA, M-A-A, to 50457. That will start the process for you to be able to go through and be a member of MA. Again, it's free. And by the way, when you get that information, you get to read it, you can customize it, you can look at it, it can help inform you. Road to housing, we talked about that before. There are calls to action on the road to housing bill, and different movements that are going to come along every time there's something that's impactful. When we have to, increase funding for the National Flood Insurance Program. Those things that come up, you get it, you can see it. It will go to your state senators and your specific representative, who doesn't always know there's a T in mortgage. But believe me, numbers of emails move the needle, and they will definitely, which one got the most support? That comes to the top of the pile that they look at, and then they find out. And other thing, when you were talking about the two senators hugging each other, they come together on housing and family. They may have different ways of doing it sometimes, but they still both agree the housing party is a different group of folks. So yes, it is free, it's informational, it's time to get off the sidelines, and if nothing else, take action with your finger, read the information, and then you can always, once you're signed up, go back in, look for the residential issues, find out more so you can be informative for your realtors, your customers, your client, the people you work with.
I mean, you can sit in your office and complain all day, right? Or you can be a part of the solution.
Right.
Being part of the solution is free. It's join MA, M-A-A. So text M-A-A to 50457. I did this yesterday, y'all. It took me less than 90 seconds. And I have sent emails to my congressperson as well as to both of my senators through MA, and it takes me less than 90 seconds. If you signed up for MA in the past, you do have to renew every single year.
Right.
So go ahead. If you're unsure, it's one simple text MAA to 50457. And later, we can talk about how you put your money where your mouth is. We call that MORPAC, but there's more rules and regulations about political action committees. So I can't really pimp and promote that. Just know, once you're a part of MA, your next step is to understand what is MORPAC, what does it do, and how can you get involved. You typically would get involved in that with some form of a donation if it's something that you believe in. But Bob, if people have questions regarding compliance, and I'm thinking, look, producing LOs, branch managers, specifically company operators or people who have the controls, as we talked about, what's a good way to reach out to you or to connect with you?
Obviously, it'd be through work email. Our law firm, Weiner, Brodsky, Kiter, our web address is just thewbkfirm.com. And you can email me at Niemi@thewbkfirm.com.
So you're just Niemi?
Niemi, Niemi @thewbkfirm.com.
Awesome. He's Bob Niemi. I'm Dustin Owen. You've just tuned into the Loan Officer Podcast. If you've loved today's episode and you know there's at least a person or three that would benefit from this type of content, remember, sharing is caring. Forward them a link, forward them to the YouTube channel. And by the way, if you've enjoyed Bob and I getting together and providing you free value, make sure you give us a 5-star review. It's those 5-star reviews that tells the algorithm to tell other people just like you that this content doesn't suck and that they too should tune in. He's Bob, I'm Dio. That's all the time we have for you today, but we do look forward to catching you on the next episode. Peace.